Good morning, traders. Chris Buss here with Traders Profit Compass with your morning look at markets for Monday, July 19th. Just as a reminder, you're always welcome to run the video at 1.25x. I don't think you'll lose anything by doing that. That'll increase your efficiency by a little bit, and you're always welcome to stop or pause if there's something noteworthy that you want to make a note of. Also, welcome new visitors to the YouTube channel. I really appreciate it. Hit the subscribe button and the alarm bell. You'll get all my content. I'll continue to work hard to give you and our existing subscribers some real objective levels and information to trade off of. I think if you focus on your execution built around my levels, you'll become a better trader and make more money. Longtime listeners, thank you very much. You're helping me build the channel. Please pass along the link to people in your trading circle. I'd really appreciate it. So taking a quick look at markets, we're set up for a risk-off day today. Oil's down about 3%. I guess OPEC had a meeting over the weekend. They're going to bump up production 400,000 barrels a day. Copper's down 1.5%. Gold's down 0.7. Silver's down as well. We've got large caps, ES futures down 0.75%. Small caps are down a whopping 1.7% already, and technology NQ is holding the line pretty well, down about 0.35%. We had AutoNation report before the bell. Of course, used car prices are at an all-time high. Just as a side note, my stepdaughter up in Michigan called me. She's having some trouble with her used car and wanted to know if there were any deals in Florida to be had on used cars. I said, no, sweetie. You got to go to the repair shop. You got to bite the bullet no matter what's wrong, because it's just not feasible, especially for a young person, to go out and try and buy a used car right now. I mean, that's a kamikaze run for sure. Anyhow, apparently they blew it out of the water on AutoNation, so we can watch that this morning and see how it trades. We might be at peak used car right now. Anyways, IBM after the bell will be closely watched. We don't have a lot on the macro front. We've got a housing index number today, and we've got Netflix reporting tomorrow after the bell. So let's dive into this. I want to go over some what I think is very important stuff. I've entitled today's before the bell consolidation or correction, and I think that's where we're at, and that's what we've got to decide. So let's get into it here. US dollar, we've been watching in this little flag structure here up against resistance. Watch the dollar either for a breakout or a breakdown below 92. We've got the range there very well identified, and it's been oscillating here for a while, building up some energy. I don't know which way it's going to break, but we want to watch that. If you're new to the channel, familiarize yourself with these scenarios. I will often refer to them when talking about other charts, because it tends to be one or the other, scenario one or scenario two. Scenario one has been the dominant theme lately, but things change, so we got to keep an eye on that. Rates are down this morning. I think we're down in the 1.265 range on the 10-year yield. You can see here we broke down from 140, made that flash move to 1.3, undercut it a little bit. It's not shown on this chart. These are end-of-day values. Then we made a flash back up to back test, and now we're back down below 1.3% to start the week. And so we may be getting also, as equities correct, we may be getting a bid in treasuries just as a safety trade. So people piling into TLT, which is up about $1 this morning. We got long in this area below, right at the trend line, and as price back tested this 200-day EMA, that was a good objective trade location to get long. And now we're pressing up in the 149.50 area pre-market. A place to really watch is this 150 level. You've got a little resistance there, but then the next level above that is really 155. And if we get into the 155 area, I mean, on the 10-year yield, we're going to be pushing down towards 1.15, 1.1%, even down towards 1%. I'd have to look at those levels. But if you get into 155, I mean, yields are going to be plunging at that point. Here's where I want to spend a little bit of time focusing. NYA50R. This is the chart that shows you the number of NYSE stocks above their 50-day moving average. You can see here, we talked about it a little bit last week, that it was in the 42 range. Well, now it's down in the 35 range with the selling that happened on Friday. And now here in the pre-market, we're down, let's just call it another 1%. So that number is going to come down in the 30 type range, I imagine, after today, if the selling persists or even gets worse. But I want the thing I want you to understand is that through the last 2 months, the FATMAAN names, the Facebooks, Apples, Teslas, Amazon, Google, those names have been holding up the indexes with bubblegum and baling wire. We haven't seen the indexes, the index levels sell off commensurate with the sell-off that has been happening under the surface. My point in saying this is that, okay, let's say we're down here in the 30s or even below. 26 bounce, 22 bounce. This was back in March, historic lows. Back here, 26 bounces, 26 bounces. So we're getting down under the surface to the ranges where there have been rebounds. Can it go lower? Sure it can. It went lower here, went lower back in here. But what I'm saying is the correction may have already run its course. So I want to caution you about piling in, oh my God, short, because under the surface, the sell-off has already happened. Now let's look at these oscillators. And I have come to view these oscillators almost like the Bible. You don't want to shoot against them because they always win. So let's look at the NYSE Mcclellan oscillator. We are down here at minus 62. Look at all the times where minus 60 has resulted in bounces. I mean, going all the way back. Yeah, it can come down. We could have another couple days of selling. This is back in March, minus 140. So it can get extended, it can stretch. But these rules are here for a reason, because if you were lucky enough or good enough to recognize that under the surface rotation and you've been short participating in that, the whole way, kudos to you. But if that's you, I would be starting to scale out of some of those shorts, or at the very least, if you're in options, continue to roll them down, take money to the bank. It's fine to stay short and see how far the sell-off takes us, but I wouldn't be pressing. I wouldn't be piling in. I wouldn't be creating or initiating a ton of new shorts. If you want to take a shot here or there, that's fine, but recognize It's what the market does. You know, the sky is falling, the sky is falling. Everybody piles in short just in time to get your face ripped off. And I don't want to do that. Ask me how I know. I've been there before, and it sucks because you're Johnny come lately to the short party just about the time you're getting in, or a day or two before it's over, they rip it back the other way. So be careful. Mcclellan for the NASDAQ. We're even below that. We're down at minus 66. So aside from the FATMAAN names, the DocuSigns and Zooms and, Rokus and all these other names, the software names and semi names and all that stuff, they've already been selling off. So you're down here at minus 66. What do you really expect to gain? This is a low probability entry point for shorts. This is a high probability entry point for shorts. So I want to be getting ready for a potential bounce rather than let's load in, let's load the boat with shorts. I do not think that's what you want to do. And lastly, just taking a look at this equal weight. This is the equal weight SPY. And if you compare that to the, I'm going to show you next, the cap weighted SPY, it looks totally different. We haven't had a new high since back in, really May, and we've been consolidating sideways. We've broken this trend line, and now we're testing the 50 EMA. So could this come down a little bit? Sure, it can come down. And the thing that we would really want to watch on this equal weight is a break of this consolidation range here at 146, because that's a $6 wide range. A break there would put us down at towards 140, and then close to the 200-day average. Now, what I've done here for you is give you the ticker symbols for the equal weight ETFs for these different market segments. You'd want to use those particularly if you want to get a better read from the sector rather than, energy, for example. Exxon and Chevron are 30% of the index. If you want to get a better read on the average stock, you would use this RYE. Same thing on consumer discretionary. You got Amazon at 24% of the index. If you wanted to knock out that effect, you could look at RCD to take get a better read on the what the sector is doing without that cap weighted effect. So let's move on to SPY. Friday we had talked about pay attention. Why? Because we were testing the bottom of this channel and now it is broken. We are testing the 20-day EMA. We are down this morning, and so you can see where the 50 lies down here at 423. So the door is open for more downside. And normally, a break of this trend line is your signal to get short. Now, that's why I say this is going to be an important week, because are we going to consolidate or make a big move down? Personally, I think it's going to be consolidation at least this week. Why? Because I think the FATMAAN names are gonna hold a bid. We saw in the pre-market that NQ is only down 0.3%. Relatively speaking, that's nothing compared to the other ones. We've got all those names beginning to report next week. The Apples, the Microsofts, all the big names are going to report next week. I don't think they're going to sell off ahead of earnings. I mean, if they do, we're going to have the levels, and I'm going to show you those right away. But I don't think there's going to be a wholesale sell-off of mega cap tech heading into their prints. So, but we'll have to watch that. But getting back to this here, certainly a time that if you've been long and participated in all this, I'd be taking stuff off the table. And if it turns out it is a consolidation, that'll be fine. There'll be plenty of time to, okay, the consolidation's over, pile back in long. I mean, we'll be able to do that. If this comes down here and, hits the 50 as it did here, as it did here, as it did here, and bounces, then we're fine. If it breaks the 50, then you could have a deeper pullback into the, into this 400 area. We do have a large volume over price bar here, right in the 415 area. So that might be a level to look for support. But just remember, the backdrop is those oscillators are already way into oversold territory. And for SPY to move appreciably lower, I think what would have to happen is we tread water for this week or go down a little bit, and then mega cap tech reports and they sell them all. They blow away the numbers. We know they're going to blow away the numbers, but they sell off Facebook, they sell off Apple, they sell off everything. Then you are going to see a big move in the indexes because of the cap weighting effect. And what is good on the way up, we've been participating in that fat man long trade. A lot of us have killed it. A lot of us has done really well, but that wobbled last week. And so if the whole setup is we're going to sell the news on earnings, then you will see a big move down in the indexes. SPY 2 hour. If you go back and listen to the tape for Friday, I offered one scenario. I said, watch for the flash move higher to fill this gap and then reverse. And that's what happened. Now, I've learned in Twitter, I'm not very good in Twitter, but what I'm learning is when you get it right, you tell everybody. And when you get it wrong, you keep your mouth shut and hope people forget. Well, so this was a time where I guessed right. We went up, unfinished business, closed this gap, and then they let go, and then they filled this gap down below. We came down here to the midpoint of this, the midpoint of our 2 hour rising channel. The thing now, today, is to key off this 430 and a half, because remember our principles. You come back to the halfway point. If that doesn't hold, then your technical target is the bottom of the channel. Very much like over here where we were at the top of the channel walking above, broke the bottom of the channel, or broke the midpoint, then came down and tagged the bottom of the channel, and then we got our bounce back up to the top. Also, a thing to watch on this chart, be aware of, we've got an open gap down here, and then we've got the 50 EMA on the daily coming in right below it. So here's a scenario that would terrify everybody. We come down to the bottom of this channel, and we're not the only ones that have charts. Everybody's got the charts. So it comes down here, it breaks the 2 hour channel, and then it comes down and fills this gap. So we've got a technical violation here. We come down, we fill this gap, but we get to the 50 on the daily, and that's where to look for a bounce. So that would take care of this gap, bounce off the 50, and then go rocketing higher. 30-minute chart. There were a lot of places to make money on Friday if you were paying attention and you didn't get all locked into some kind of scenario. Here was the flash gap fill higher. Where could you have gotten short? If you're Johnny day trader, you could have gotten short at the top of the gap. You could have gotten short once the bottom of the gap failed. You could have gotten short here. Remember, losing levels from above in general is a place that you can sell. So you could have sold 434.5. Here was a little consolidation area where it hung out for several hours. Then finally, when 433.5 broke, then it was down the rest of the day. You had a chance here at the top of the gap for a bounce, didn't get it, so came down. So we filled this gap, and then we filled this gap, and now today I would key off of Friday's closing low right here at 431. Obviously, we're below that now in the pre-market. I think there's a support area at 428 and then on down to 426. And then I would go back to your 2-hour chart and just remember 426 is the bottom of the channel. So that would be the point where it could get kind of crazy. If that gets violated, make that flash move down to fill that gap, and then come down and tag the 50, and then get a bounce off of that. So here's the cues. This has been the run up in the FATMAAN names. Pretty much a unidirectional move. Notice the position of the indicators. We got an RSI violation. We've got a PPO rollover bear cross. We've got a trend line violation. Still above the 20, but this is a very cautionary, even bearish look on the daily, because now the door is open for a bigger move down on the indexes down to the 20 and possibly even the 50. Now remember, going back to the oscillators, like on the NYSE, it's measuring all the stocks in the NYSE, and the same thing on the Nasdaq oscillator. It's measuring all the stocks in the Nasdaq. And my point here is this: the Qs are dominated because it's a cap-weighted index. The Qs are dominated by those FATMAAN names. So if you want to short something, or you see that they start selling the FATMAAN names after earnings, the place to short will be at the index level. Why? Because the stuff under the index has already sold off. I think the opportunity will be at the index level because the FATMAAN names have not moved yet. They're still near their highs. So I think the Qs will be the easier trade rather than to, go down below the surface where things have already sold off 20% and try to find juice there. I think it's going to be right here where you can see even just a simple move to the bottom of the channel will bring this down to 335, which is $30 below where the index is right now. Here's the 2-hour chart. Top of the channel rejected, down. So now today, I think this 358 will be your pivot level. If price can recover 358, I think you can be long. But as long as it stays below, I think it's going to eventually find this 354.5 down where this volume over price level is. And you see this little consolidation. And here's the prior low that we tagged last week or whenever this was, back here in early July. So that would make sense technically. Come back and back test this low down here at 354.5. Here's the 30-minute chart, just a blow up on that. And you can see this was the level that we just talked about, this 354.5. You're going to see some support down in that area. IWM, this is a mess. I mean, an absolute mess. We have been talking about this. We did not get the trade. The trade was to fade once this couldn't break out. I mean, everything in hindsight is easy to do, but certainly objective to shoot against the high when it couldn't take it out. So now we've lost the 50 and the 20 and the 8-day. The 8-day is broken below all the moving averages. So now IWM is incoming to the bottom of this big consolidation range of $23. We talked about it Friday. You start seeing a breakdown below 212, into the 210s. You could be looking at 190, which is $23 below this 212. So that would make all this look like a big, big, big top. And once price breaks below, then, if we sell off into August, we'd be looking at much, much lower prices. Here it is on the 2-hour. Just, I think today you key off a 215, you stay short below, and here's that 212.50 level. That was the low back here. But then I have the next level below that as 209 as a level of support if 215 fails, and then the bottom of the range fails. What I would expect is a look below this morning, because that's a big consolidation range and we haven't been there for a while. So you may see a bar that comes down below but then comes back above and holds 212.50 for a while to make, for everybody to make sure that they really want to break it down below. So I would not be surprised if they, flashed it lower, came back up and held that 212.50 for a little while at least. And then if they want to take it lower, they can, obviously go down to 209 or whatever. And here it is on the 30-minute chart. I've had to back it out just to capture these lower levels here. So let's knock out Facebook and the rest of the FATMAAN names. Could not break out. Terrible price action and now consolidation. What I've done here is just hypothetically say, okay, this consolidation is a flat bear flag, leg down, consolidation, measured move down, aligns really, really well with the bottom of this prior $8 trading range, which would bring price back into 329. I think today, if they're going to sell FATMAAN into earnings on Facebook, I think this 340 is critical to hold. And if it can't hold 340, I think there's a real good chance that it finds this 329 on this measured move of this flat flag. So I would really watch 340 like a hawk today and in the coming days. Apple has held up pretty well, but we did come down to the midpoint of its rising channel. You lose 146.50 today. I think you come into 145 and potentially 144. You get below 144, definitely 143, and then you're looking at a pullback into 140 on Apple. I mean, if I had a bias, I'd kind of doubt it, but you got to go by the levels, and you got to suspend your belief in, Apple's a good company and there's earnings next week and that's bullish. If it starts breaking below 146 and then 144, I mean, if you're long in here, you got to step aside. If you're a tactical active trader, feel free to short it, against these levels, but you can't just stay long if you're a tactical trader. Now, if you're on the daily time frame and, you know, we've broken out, a back test of 145 is just that, a back test, and you're still fine. But if you lose 145 here, lose the 8-day, then you're back in here, and it makes the breakout look fake. And we've seen what happens when you have a fake breakout. It's never good. Tesla. Couple days of selling. I've dropped in a trend line here off of these lows. Just so happens it comes right in here. Got to hold 640. Let's just call it that. Got to hold 640, or it's coming back into 625 and probably lower. If it can hold this trend line, the door's open, you know, ahead of earnings next week. So use that trend line and 640 as your dual layers of support. Microsoft been holding up pretty well. Consolidation range between 280 and 283.5. I would just use 280. Anything above 280 is fine. You lose 280, you're looking at 277 pretty quick, I would imagine. So use 280 as your pivot. Amazon, very disappointing. We had this fantasy drawing of a big bull flag. You know, here's a massive impulsive move higher. Consolidation range. We were looking for 4,000, and the market had different ideas. We've lost the flag. Now we're coming back. Now all eyes on 35.50. If you want to fine tune it and say 35.54, knock yourself out. But that's the breakout area that everybody and their brother has been watching. And here it is on the chart. So we broke out. Now we back testing the 20 and back testing the breakout. If it holds here, that's your second bite at the apple. We do have earnings next week. I'm not one to hold through earnings, but if you hold this breakout, then it's a simple breakout and back test. You break back into this range, back into the $600 range here. Bad. You don't want to be long Amazon down in here. It's just not a good technical setup. Netflix, and this illustrates why. Went for the breakout, came back in the trading range, and now we're almost all the way back to the bottom of the range. We tagged 557, and now we're all the way back $30 lower at 527. Now it's all about this gap here at 525. Use that as your toggle point. Below 525, I would look for a gap fill down to 517, and potentially here a back test of 515. Let me show you that on the daily. This was the $35 gap that we were shooting for on the breakout. Consolidation, breakout, gap fill, tag of the high of this consolidation range at 560, 557, and now we're back in the soup right here. If you come back and lose 515, then your technical target is going to be back here at 470. Not so hot. Google's still pretty strong. We've got this range here. I would want to see price hold 25.30, and I think that's your pivot for today. If it can hold that and get back up here above 25.50, then all this, or 25.60, this is all just noise. But if you break below 25.30, then you open the door to 25.05 and potentially back to 24.80 ahead of earnings. Here's the one that's really concerning to me. Semiconductors, two fake breakouts. Here was the first one. Came back into the range, found the 50. Tried to break out again, and it's just been 3 days of liquidation. Back into the range. Lost the 8, lost the 20, lost the 50. You should be out, pure and simple. If you were in semis long, I was, got stopped immediately. I don't think you can do anything here. I think you got to wait until 240. That'll be a big, big level. If it comes down to 240, there'll be an opportunity for the bulls to regroup and potentially bounce it up. But you lose 240. I mean, you're coming down here to the 200 at 226 and probably all the way down to 223, actually at the bottom of this big $35 range. And so we've gone from very optimistic and hopeful with Amazon and Apple and semis breaking out to relative disappointment that, those breakouts have failed, at least in the case of semis. And then, going back to that Amazon example, here, semis did the same thing. They broke out and came back, but then lost this breakout area. And so if Amazon loses its breakout, there's the potential for this kind of scenario where once it gets back inside, everybody and their brother will realize that being long is wrong, and that brings in even more sellers. So got to really watch that. So let's see how today rolls out. Keep in mind those oscillators are getting extended to the downside. I'd hate to see you, go gonzo short just in time for a bounce. So be careful about that. If you want to selectively take a shot and you're nimble and you're on top of it, that's fine. But if you're looking for something out in time on a short, I would be very, very careful. So anyways, thanks for watching. I really appreciate it. I hope you have a good day of trading. This has been Chris Buss with Trader's Profit Compass. Talk to you next time.